Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah. Over the next 20 minutes, we'll talk about 2 or 3 key aspects of the MF space and looking at what the equity markets have done in the last few days or weeks. Our small caps a good space to invest in. Our small caps funds a good pocket to invest in is obviously critical to talk about. So we'll do that. We'll also talk about whether the RBI, the SEBI, or the combined decision on not allowing funds to invest in international products or international stocks. Could that see a reversal soon? Is it possible to even predict that? And should we prepare for that or take it as it comes? But more importantly, and most importantly, if you will, we'll talk about the recent spate of news around Axis Mutual Fund, which have caught the imagination of a lot of people. And a lot of people have been thinking whether the funds are safe, not safe, whether it's good to invest in that fund schemes versus some of the other fund houses, without, irrespective of what their performance is. And is that the right approach really in the first place? So to talk about that, all the way from the US is Mrin Agarwal, founder of FinSafe India. And from Delhi, or rather today from Pune, Kshitiz Mahajan of Complete Circle. They both need no introduction. Thank you so much, both of you, for joining in. And Kshitiz, to you, all the best. I learned that you guys have started off your portfolio management services as well as a product. So all the best to both you and Gurmeet and the Complete Circle team for that.
Thank you, Neeraj. We need your wishes, and thank you very much for your wishes.
No, not at all. So, Kshitiz, can I start off with you since we're talking about that? I'm making a change. Usually I go to the ladies first, but let's not bring the gender into the equation here, Kshitiz. Let me start with you on the Axis MF developments. Now, a lot of people on social media are saying that, hey, should we keep our investments there? Should we take them out? Should we think about making newer S.I.Ps or newer investments in other mutual funds, irrespective of our Axis funds may be doing? Because there is this event or episode that has allegedly happened. Can you talk a bit about that? What is your view?
So, Neeraj, for the understanding of everyone, how mutual fund management work is very important here. There is a fund manager assigned to a particular specific fund. There's a co-fund. There can be a co-fund manager. There's a dealer assigned, and there are common research analysts which provide research to various co-fund managers. Fund manager, he normally trade through the dealer assigned dealer, and that's how the trade, like, because you buy underlying stocks in a fund or a ETF, that's how it's been placed. Now, in this scenario, still they have not reached any conclusion. 7 funds which have been talked about, where there might be a chance, because the conclusion is not reached, we are no one to reach the conclusion of front running, out of which 5 are ETF, 1 is a value fund, and 7th one is a quant fund. There are 7 funds. And front running doesn't affect the fund per se, because it affects somebody who's doing, and it might affect the fund if the underlying holdings are not the right holdings. But having said that, these are ETFs which were there, and a couple of other funds are value and quant funds. My submission here is we have got statements from Axis Bank yesterday, 3 days back from Chandresh Nigam, MD and CEO of Axis Mutual Fund. The charge of 7,700 crore funds have been given. There is not any major movement of NAV, which is movement of NAV is because of market fall only. I've not seen anything which is moved because of this news. My sense is let's give some time before things unfold. But with other funds, I don't see these funds should be taken on a different note. With other funds, there is no need to be even worried about. It's a good fund house, and there are these type of things which should be avoided and not happen. But if it has happened, they are doing the investigation at their end since February onwards. It's an internal investigator of Axis only which is doing investigation, and that in itself gives little comfort that yes, they will reach a conclusion and they will realign funds as per the objective of fund. So I don't see a reason that one should look at redeeming or stopping SIP right now, because there is no as such movement. Markets are falling, otherwise maybe the fund NAVs have fallen, but there is no as such movement. And a shorty has been given. They're managing more than 2.7 lakh crore of assets, and they have the largest equity assets with them as the AMC. So that's my conclusion, or let's say that's my belief, that one should stick around unless and until there's an objective of the scheme which they are planning to change moving forward.
Brin, you would have observed, I'm not saying such an instance would have happened, but instances of this nature in other, not necessarily in AMC, but otherwise in markets per se, have happened. Is this a good enough reason for people to feel worried about their investments, or is it a reason which shouldn't make people too worried? What is your view?
Well, certainly, I think people should be watching out. I think it is a bit of a cause of a worry, but not a cause of worry enough to have a knee jerk reaction to exit from the fund at this point in time. Again, if you look at in this specific case, it's a good fund house, it's got a good performance. Liquidity in these schemes is not an issue. Most of them are ETFs with large cap holdings again. I think, what we've seen from the past instances is that the regulator has always come out with a new set of regulations, tightened regulations, and tried to make the system more foolproof. And I think, I really don't know how they would do it in these cases, because there are already a huge set of regulations and huge set of restrictions in place in terms of access and stuff like that. But I think, what an investor is probably looking at now is that what can be done to protect me from such instances in the future, right? And I think that's what we are looking at to see. But really, it is a cause of concern. I think you need to wait and watch. Do not have a knee-jerk reaction and exit. Again, if you're not comfortable, there's a lot of liquidity. You can certainly exit, but remember, you're exiting when markets are down. There could be exit load, there could be a tax impact.
No,
but if you're
sorry, I'm coming in here. Forget the timing. Let's assume the markets were higher. Would you believe, or would you, if you had the money, would you exit from these schemes and look at other AMCs, or is this not a cause enough for you to exit the AMC altogether?
It's not a cause enough at this point, given the amount of information that's there. But I'm saying that if an investor is uncomfortable and they're not feeling happy about all of this, then sure, look at exiting. And in any case, a lot of the funds are sector funds, which I don't recommend. So I'm just saying that, yeah, if you're not comfortable, you might as well exit.
Okay. Kshitiz, to your mind, and one can go on and on about this, but I'm still trying to understand. Would you believe that in any of the, whatever has come out thus far, do any of those alleged or likely events that would have happened all this while, presumably, do they impact the returns for somebody who is invested in the fund? Could that be a case or not really?
So Dheeraj, it can impact, if you ask me, it can impact the return part because had it been somebody is front running any script in the portfolio, so the certain jump which is not an everlasting jump can impact spike the return of the portfolio, and normally that should not be the criteria, but most of the people, they look at the past performance and that's how they count.
Of course.
But one comfort which I get from their MD and CEO, the statement says that all the funds are open for redemption. So anybody can redeem whenever they want to redeem. Second important point is that there is enough liquidity in the funds if you actually go through the underlying security. Third, the most important point here is that as most of the clients, if they are still uncomfortable, so it obviously people have lost their money in fixed income deposits like ILFS and DHFL. So there is a cause of worry when this news has floated, and a couple of days were really very bad, initial couple of days when that clarification started coming. One is equity markets falling. Second, these type of news actually led to that whether your money will come back or not. But I think very maturely handled by Axis Mutual Fund and Axis Bank. Having said that, if you have any client who is watching this has a little bit of uncomfort or discomfort at this level also, then you should move out. Otherwise, you asked me, I have investments. If I have investments there, I don't even remember whether I have investment in Axis or not, because I don't look at my portfolio. That's what we tell clients, don't look at your portfolio. I would have not redeemed because I feel it's a fairly mature and good fund house.
Okay. Yeah, guys, that was the answer that I was looking for per se, because I understand if an investor is uncomfortable, she or he can move out. But the idea was whether the person needs to do that or no. That is the answer that I think I was looking for. So Kshitiz and Min, thank you for giving me that answer. If you guys had it, presumably you wouldn't get out of it. That's what Kshitij said. I presume that's your answer as well, that if you had it, you need not have moved out because of this.
Yes.
Okay.
I would
but because there's because of this,
I
but
haven't
because there's
moved out. Rather, I do have some investments in some Axis funds, and I haven't moved out.
Okay, great. Okay. So viewers, well, these are two people who eat, sleep, breathe mutual funds, amongst other things that they do. And they are happy staying with their investments, whatever little they might have or do have, into the Axis AMC schemes. This episode has not impacted their view out there, if that gives you comfort. Keep in mind, viewers, there is no saying that the advisors who come on the show or any show are necessarily always right. I'm not saying that one bit, but their reputation precedes them. So you can take heart from what they have said. And if you believe in their advice per se, then at least that should be a cause of comfort for you if you are a current or a potential investor into any of the Axis schemes. So thank you so much, both of you, for that clarity. Now, Mrin, point 2 is around small caps, because that's the other thing, right? Here, there is no single fund house, but a bunch of funds which have come off really, really rapidly in the last few days. And a lot of people, like every time, say that this time could really be different because of liquidity crunch and inflation, etc. So my question to you is, if somebody has investments in small caps or is thinking of putting some money into equity funds, are small caps a good option to start an SIP or a lump sum, as the case may be? Or would you wait and watch, or would you avoid them altogether and you would stick to large caps or large and mid caps, or as the case may be?
Well, in fact, I always recommend some bit of small caps in the portfolio, because if you look at small caps on a long-term basis, which is, of course, 10 years plus, you would always find that there is a good amount of alpha that you can generate there. And it does provide a good kicker to the portfolio as well. When you also look at long-term rolling returns, you do find that small cap funds have done very well in the past as compared to mid cap or as compared to large cap. So certainly I would say have a 15%, maybe 10 to 15 or 20% allocation to small caps. But I think the key is your behavior when you have invested in that small cap. So it's easy to find a fund to invest into, but I think it's that much more difficult to remain invested. And this is what is going to be more challenging in a small cap, because you're going to see volatility. You're going to see, there's a huge amount of stock return variance within small caps as well, and how you are going to handle that. And I mean, rather, are you going to do something about it or not? So essentially, small cap, if you want to invest, you need to have a 10-year time frame, and you just need to remain invested. Of course, you need to choose the fund right as well, but I think the main thing is really about remaining invested for the long term. Certainly, it's very difficult to say what's a good time to invest, but from a larger allocation perspective, I would certainly recommend some amount into small caps.
So start an SIP at the current juncture as well, is what you're saying.
If you're in it for the long term, why not?
Of course. Okay, perfect. Kshitij, what's your sense, considering all that's happening around us and the kind of, if not a carnage, then the deep gashes that we've seen at that end of the spectrum? Should people initiate SIPs or lump sums, or continue with their SIPs in the small cap funds?
So Neeraj, there is a set of client or risk profile for which small cap fund is right, as in your multi-cap funds or in many large cap or larger mid-cap funds also. Sometimes you see small cap allocation, which normally they take. But yes, young people, which is up to 35 years of age, they should have a clean, or maybe 40 years of age, they should have a clean allocation towards small cap if their risk appetite is little high, risk profile is little high vis-a-vis other clients. Having said that, at these juncture, if you ask me, SIP, anytime you can start in small cap for these type of investor profile, and there can't be any issue with regard to good fund manager and fund houses. So there are 3 to 4 funds where I see that there's a lot of value add which is building up. And I synchronize with what Mrinal has said, that small cap allocation can't be for 5-6 years. It has to be for 7 to 10 years. There can be a phase of 3 to 4 years there is no performance, and there can be a year where there is a jump or bump of 120-130%. So that happened with most of the multi-cap funds also. But herein, I very seriously feel that forget about small cap or large cap or any other category. This is the time one should actually go slow on STP also. because we might see consolidation happening across markets, and you don't know which way this war will go. So my sense here is that STP should also be little long for 4 to 5 months across portfolios, and SIP can be started in small cap up to 10% of allocation. So, and once you look at those funds with low volatility, with good rolling returns, and third, with consistency of fund manager with the fund, because in small cap you have little more stocks in the portfolio vis-a-vis other portfolios, because you can't take 5% allocation in single stock in small cap. At the same level, if the consistency of fund manager is there with the fund, then you can see a better hand holding rather than when faces are moving and there are new fund managers coming to the picture. So I will like to go with those funds where you have the consistency or longevity of the fund manager with the fund.
Got it. Okay. So are there any examples, Kshitij? I mean, are there houses, are there schemes that you think are well placed? And people can, of course, will do their due diligence, but what is your thought?
So a couple of them, in fact, neither surprisingly, SBI small cap and DSP small cap, and these are just examples. There's no recommendation. These both funds have been managed by their CIOs. SBI is managed by Srinivasan, DSP is managed by Vineet Sambre. So when the most senior post person in the team is managing small cap, it gives you a little more comfort. And they've been managing this fund since the time of inception, it's last 7-8 years. These are the two funds which are clear-cut example of that they denied taking allocation in the portfolio when they were when as a house they felt that this is not the right time to take allocation in small cap. They closed the funds and they opened up as and when there is an opportunity which was there, they have taken. Another example is of Kotak and Nippon small cap. Again, longevity of fund manager is there with the fund house. So all these 3 to 4 funds have done pretty fairly well over a period of time. DSP has been lagging over last 5 years returns, around 13-14% compounding. But I'm saying that should not be the cause of worry because the fund otherwise has done overall very well. But idea is that if the longevity is there of the fund manager, and if a fund house is playing out right by not taking money when they thought that the size is big and they can't take more money, I think you should look at these type of funds.
Got it. Brin, what are the funds that you believe people can choose in the small cap category?
Well, I concur with Kshitij. My recommendation is also DSP and SBI for the reasons that he outlined. One is the consistency of performance and, of course, consistency of fund manager. Because when you're investing in a small cap fund, you're looking at a fund house that has a good ability to do good research and execution at the same time, right? And I think, having a fund manager managing it right from inception onwards, and we've seen good performance. We've seen them looking at buying good businesses, right, which have healthy competitive advantage. So I would still go with SBI and DSP as my bets.
Okay, well, we are a few options, but SBI small cap and DSP small cap do stand out as funds. But if you're investing in small caps, yes, it's a good time to invest, but both our experts say that invest into them with a perspective of the next more than 7 years, like 7 to 10 years, that kind of a time frame. Don't invest into them from a 3-year perspective. Yes, they may do well even over 3 years, but don't invest with that perspective because they may not necessarily give you the returns in the next 1 to 3 years as well. It may happen. So I think that's the point. Okay, the final question, like somebody, 2-3 people have asked me this over the last 3 or 4 weeks on Twitter about the international investing funds, and should people keep some monies aside, or is it pointless because the regime or the ruling may not change? Now, I think it's difficult to answer that, Kshitij, whether it will change or no. But what would you do if you were investing into international markets through mutual funds and that's come to a grinding halt about a month or 2 months ago? Do you kind of keep some money aside, hoping that will change soon, or you're not doing that currently? Kshitij, that question is for you. Yes, you are. I think we seem to have just had a slightly snap connection with Kshitij. Mrin, can I ask you the same question? Would you keep some money aside for that investment, or what do you do? Yeah, Mrin, carry on. Let's come to you first.
So, Neeraj, Yeah, ma'am, you go. Ladies
Okay,
first.
okay. Yeah. Yes, I know it's looking very difficult in terms of seeing the limits really getting increased for various reasons. But I would still keep some money aside because certainly, if you look at overseas markets, especially US markets, have corrected anywhere from 16 to 25%, right? So I think, it's a good time to look at keeping some money aside and maybe looking at investing in tranches. Of course, you still can invest in FOFs that are investing in ETFs abroad. So there are a couple of them that are available. But I wouldn't, I would actually wait for some time before investing that money. But certainly, I would keep some money aside for this particular purpose.
You're hoping that the ruling will change soon.
I don't know about that. I mean, as I said, there is still an option to buy an FOF that invests into an ETF, and there are about 4 or 5 of them available. But I'm hoping that it does. But it's looking a little difficult, right? Because all of these decisions impact exchange rates, which are not very great right now in any case, right? So I don't know. We have to wait and watch. But yes, I would keep some money aside. And if nothing happens in the next maybe couple of months, then maybe look at reallocating that capital somewhere else.
Okay, so the valuation's in, but obviously no one knows about the ruling. She'll try it out for a couple of months. If it doesn't change, then she may take a decision then. Ashish, what about you? What are you doing when it comes to your international investing? Because the fund route is closed. Do you keep some money aside for hoping that the ruling changes sometime?
Why we diversify, Neeraj? We diversify first to de-risk ourselves, and second to have a better alpha if somewhere else the alpha is getting generated. If you take out Reliance from the index, we are already 20% correction level. It's Reliance who's holding the markets. And if I'm not clear about whether it will happen now or a year later or 6 months down the line, the discount is already there in the Indian market in itself. I will like to do a 4-month STP for clients across funds in domestic funds only. And as and when the limit will increase, you can then rebalance the portfolio. Because the discount which Nirmal is talking about, yeah, US market is also corrected. I'm saying in India also there is huge discount. Tomorrow, if dollar will strengthen, the situation will not be that good. So my point is here is that the obvious reason allocation is that when there is a discount in Indian market, and it's a fairly healthy discount which is there in Indian market, over 5 months, you should not wait for that regulation or approval to come in. If you have done a STP, otherwise your money is lying in liquid fund. If the regulation will come, you can still stop those STPs and park your money here also. But at the same time, keep taking opportunity of these levels where there's a discount in the market.
Got it. Fair points, both of you. Thank you so much. A couple of very important topics discussed today, and I hope viewers benefited from that. Mrin, Kshitiz, thank you so much for joining us on the show.
Thank you.
And Kshitiz, you have a great evening. Mrin, you have a good day since you are in a completely different geography today. But thank you, both of you.
Thank you.
I hope we can get a call from US to unlock the limit.
Let's see if that were to happen. But yeah, and viewers, thank you so much for tuning into this leg of the Mutual Fund Show.